Hey everybody, Boris, last week at Forex. Welcome to the commodity dollar update for Aussie dollar, dollar CAD, Kiwi dollar for June 18th to June 22nd, 2018. And the story, I think, this week in the commodity dollar land was the seeping out or the unwind of the carry. Because the big takeaway fundamentally this week was that the dollar now is positive carry to everybody, to Aussie, to Kiwi, to certainly to CAD. And that is being felt, I think, by the market, and it's going to continue to be felt, especially if we can get a rally in U.S. rates. And more importantly, if we get a kind of a decline in short-term Aussie rates, let's say the Aussie 2s and the U.S. 2s really start to diverge and the spread gets wider, it's really going to put further pressure on the Aussie to the downside. I really think it becomes now fundamentally an interest rate trade, especially amongst the high yielders with Aussie and Kiwi. And CAD, of course, has its own story, which we'll get to in just one second. So we had a big reversal in the Aussie, both technically and fundamentally, and we came right back down towards the 74 level. So now we're 76, 74, but 74 is a very, very tempting move to the downside, and I think could really get ruptured this week as we go forward. Dollar CAD was a massive mover to the upside. It's getting hit from every angle in the sense that you have a slowdown in the economy. We actually have a lot of economic data this week, so it's going to be a very good window into just how slow the Canadian economy is at this point. And much more importantly, the vicious assault from the Trump administration against Canada, plus to add insult to injury, the truly sort of last straw that broke the camel's back was the Trumpian government in Italy is doing the exact same thing by refusing to ratify the deal that Canada has with Europe. So Canada's kind of getting hit on trade from every single angle, and Canada is a very trade-dependent country, and that's obviously having a serious impact. Most importantly, it's having a serious impact on its monetary policy, as the Bank of Canada governor came out and said that given the tensions surrounding the trade issue, it's very unlikely they're going to do anything on monetary policy for the near term. They really want to keep credit as easy as possible. So dollar CAD broke out, took out the 130th. It's really the strong trade over the next several weeks as a possible move towards the 135 is very much in the cards. And Kiwi is kind of the very, very quiet second tier trade here with 69 holding support, 70 now resistance. It's very much just going to, I think, not much of a story there. It's just simply, I think, going to follow the others in a more muted fashion. You look at the calendar here, and the story on the calendar is basically that we have the RBA minutes. Interesting thing is that some of the market commentary now, I think NatWest, I forget who it was, one of the big Australian banks, actually came out and said they think the next move by the RBA could be down rather than up, which is a complete reorientation of market expectations, and yet another reason why Aussie is certainly a sell the rally trade here. As a matter of fact, Aussie through 75, if it rallies through 75, probably is going to be an excellent establishment of a short trade on a long-term basis. Kiwi has the GDP data. It'll be interesting. We're actually sort of mixed on this. We don't have a view because of the mixed pre-data on that. And then last but not least, a lot of Canadian data, which Kathy is going to update the data set depending on how wholesale's figures were. But given the fact that we were sort of softer on consumer and manufacturing prices, CPI should be lower, and retail sales could be lower as well. So if you have like sort of a double whammy of softer CPI, lower retail sales, it's really going to crush CAD and push us to 133, perhaps even 134 before the week's end. So it's really a story of weak, calm dollars. Let's take a look at the charts here. And we can start with the Aussie, because I really like the Aussie on the weeklies. It's such a very clear delineation of a sharp move. This, to me, yes, we are clearly at support here. But the whole foundational structure, by support I mean like sort of this level, what here, 74.12 or so. The whole foundational structure of Aussie trade has really changed. The only negative possibility of why this short wouldn't work is if U.S. rates start to compress below the 290. If there's some sort of a geopolitical event, or the market just sort of really, really thinks that the long end of the curve is compressing, that could provide a little bit of relief to the Aussie to the upside. But generally, this is a very strong momentum trade. I really like this to trade to the short side, and it certainly gives us scope here to maybe 73.50. What's the low here? This is 73.50, 73.25. as a true test of the lows. I think they're coming for the 74s. I like this trade start of the week, and it would be one of my stronger recommendations to come in or maybe trade it on the cross. Either way, I like it as a move to the downside here towards the 73.20s because we're now negative to the dollar. Australian economy has slowed down. The employment data was weak this month, and the market is really changing its opinion as to where the monetary policy is headed. It's moving the other way from neutral towards a loosening rather than tightening policy. So kind of interesting. Oh, and the final thing I sort of forgot is the slap of China, the slap of tariffs on China definitely is going to have spillover effects into Aussie. So Aussie is, Trump is like one man wrecking crew, destroying global economy one country at a time. And I think the Australians are going to feel the brunt of this move. So that definitely creates an interesting opportunity to the short side. You're wrong, or we're wrong, or I'm wrong if we take out the 76s. But I think that's a tall stretch from here, and I think the trade is going to be much more to the downside than to the upside. One of the stronger signals that we have. The other strong signal, of course, is the dollar CAD. We cleared everything here. We are now in stratosphere territory. We're now moving clearly towards the 34, 35s, and it's basically sort of the key takeaway from this week's price action is calm dollars are a sell. Whether you want to do them on the crosses or you want to do them directly against the dollar, they gave some very strong impulse sell signals here. This, if you look at this on a weekly chart, is literally building up momentum for even a stronger move to the upside here, because you have higher lows, you cleared the resistance. Maybe we have a little bit of consolidation. The only way you would be wrong on this is if we came all the way back down towards kind of like 28, 29s, and that would suggest, and this is one of the most maddening things about trading all of this in this environment, is that Trump all of a sudden warms up to Canada, forgets all of the tensions, doesn't want to put down any kind of tariffs, and makes nice with Justin Trudeau. If we have kind of a complete reversal of sentiment, yes, we can reverse. But barring that, which I think is a very slim chance here, the move here, given the fact that we have data that could be negative, that dollar yields are rising, all of that should be very positive and push us probably towards the 34, 35s over the next several weeks. And then Kiwi, just sort of a slow, steady drip down. It does have better support. Kiwi is a relative strength trade here if you're kind of trading this. Either Aussie Kiwi to the downside or Kiwi CAD to the upside. Probably either one of those trades could be a very, very mild cross-based, commodity-based trade. We'll take a look at those in the crosses. So that's pretty much how the week shapes up. On the calm dollars, wish you guys the best luck, the best trading. Boris Landsberg over now.